We are what we repeatedly do. Excellence, then, is not an act, but a habit. Will Durant. We achieve excellence here at chartingwealth.com 10 to 15 minutes a day following these charts, learning the nuances. That is all we ask. We don't ask that you spend 3 or 4 hours on Saturday or Sunday. To learn how the market moves each and every day requires you to spend just a few minutes. At the end of the day, unless of course you're in a trade, then you would check twice a day following these charts, whether it's the ETFs that we follow or as you find favorite ETFs or stocks of your own that are trackable, you follow those. Now, let's jump into these charts. We'll talk more about all of this as we move along. What do we see going on? Everything up for the day but gold. And we see the NASDAQ 100 up the most. Let's look at the S&P so far this week. You always start on your biggest chart. Your biggest chart is the weekly chart. That's the biggest wave. All things being equal, the market tends to move in the direction of the largest chart. That weekly chart is trying to cross over, going up. So far, so well for this week. Big green up candle. Derivative oscillator still negative, barely holding on. Price percent oscillator trying to cross over. We'll see what happens when we get to Friday. Now, again, with the election close at hand, just in, that's behind us, but still, we're waiting to see how all of this works out and the shakeout in the short term. Things are interesting. S&P up 0.76% for the day. And again, trying to swing up. We go to the 2-day chart. What do you see there? We called that 2-day crossover going up back on Monday, this latest Tuesday and Wednesday candle. Let me move the 2-day aside. You can see we've not reached anywhere near the high that we did on that prior candle, but it is a green up candle, is moving up the 2-day trend line. So we'll keep our eye on things, see how that develops. What do we see on the half-day chart? This shows you where things peaked. That was on the 9th, Monday morning. And then it dropped after that and is literally just sliding sideways since then. So looks like the market, jumped up quite a bit and then is digesting it now. Is it digesting it to move up further or to move down? We don't know. That's what we're going to wait and see. Right now, the 2-day and the half-day are moving up, but that weekly chart is still confirmed down until we have a confirmed crossover, and that never happens until the close, right at the close of the market on Friday. So we're waiting to see how that moves along. We still have, of course, 2 more days of movement this week, and then we shall see. What's up with the Qs? Now, it sprang back. We see up 2.24%. Now, we look at the price percent oscillator. It's flat. Derivative oscillator negative, losing downward momentum. Green up candle forming, reaching again, not as high as the high was back at the beginning of September, but it is moving up. Look at the 2-day. You can see where things sprang up on the 2-day candle ending Thursday the 5th. That was Wednesday and Thursday of last week. And then Friday and Monday of this week, if we move the candle aside, you can see how high it went. Not up anywhere near that on this latest 2-day. Now, it did cross over going up back on that last candle ending Monday the 9th. But this latest candle is a red spinning top, means indecision, tending down. Price is above the weekly trend line, is well above the 2-day trend line. And in fact, let's redraw that. And in fact, it is actually below that 2-day trend line. And we see the price percent oscillator pulling away ever slightly from the red signal line. So again, we'll watch and see just what happens at the end of the week. Doesn't look like we're going to have a crossover going up unless there's just considerable up movement on Thursday and Friday. Just don't see that happening. And look at how wild this looks. Looks like the half-day chart was going to cross over, and then the price percent oscillator just went flat. Things down for a day and a half, and then moving up on Wednesday. So we'll just continue. That was the drop I was talking about. We'll just continue to wait and see how that plays out. Derivative oscillator gaining downward momentum. It's the oscillations from all that strong down movement for a day and a half. So we'll see how things go there. Again, markets in flux, waiting for something to show us what to do. And my friends, sometimes we just have to be patient. First rule in trading, don't lose money. Second rule in trading, make money. But when you lose money, it's so much harder to earn it back. Not only does it crush your confidence, but it takes your money and means you have to earn so much more just to get back where you were. So we're going to continue to watch and be smart about this in our practice trades. I want you to treat your practice trades just like they are real money. Now, what do we see going on 20-year bonds? Up for the day, 0.36%, so up just a little bit. But look, overall this week, moving down. We go from the weekly to the 2-day. We can see where, again, it is pulling down sharply as far as the Heikin-Ashi candlesticks go, and not reaching a lower low at this point. But we also see that price percent oscillator, we talked about this yesterday, bouncing off, heading down, and we go from there to the half-day chart. That's where we see the big strong down move was on Monday morning. Remember, stocks jamming up then, bonds jammed down, and then just sort of flattening out, sliding sideways. So again, we'll wait and see how these things sort themselves out. That is where we are on 20-year bonds. Now, gold down so far this week as far as our Heikin-Ashi candlesticks go. Look at how the price percent oscillator is pulling away from the red signal line. Derivative oscillator gaining downward momentum. Check out that 2-day chart. Again, we see things strongly heading down on that 2-day candle. We move the 2-day. You can see, though, that it's not reaching as far down as it plumbed back on the 2-day candle representing Friday and Monday. But it is heading down. Price percent oscillator pulling away from the red signal line. Derivative oscillator switched over to negative. And of course, what do we see happening here? We see the half-day chart, again, continuing to trundle down in the morning, bit of a recovery in the afternoon, but gold was down for the day, 0.43%. So again, are you practicing just to practice? It does not hurt. These 2-day recrosses, we've seen a couple of those in the last few days. Those are things to watch and learn from. And again, be sure to fill out your trade worksheets. Those are available for free in the show notes. If you're not a subscriber, you get our trainings every day as a subscriber. That's for free. Go to chartingwealth.com, sign up. Plus, you get the daily market worksheet, weekly market worksheet, and trade worksheets. Those PDFs are in your notes every day. And at the end of today's training video, there's going to be a training on how to use each of those worksheets. You want to supercharge your training, you fill out the daily market worksheet every day. On Friday at the close of the market, you fill out the weekly market worksheet. And when you do practice trades, you fill out the trade worksheet. You can do that as you listen to the program. That is, again, the smartest way to listen to what we do. And of course, if you don't have our book and want to support the work we do here, our book explains to you all we do. Gives you in-depth studies on the price percent oscillator, derivative oscillator, Bollinger Bands, Heikin-Ashi candlesticks, our 2 main methods of entry, weekly vertical crossovers and 2-day recrosses, backtracking, all the things we talk about. And by the way, great training for you today. It will be in your show notes. Market timing doesn't work. Oh, really? Again, we refute that based upon the charts that we use on a daily basis. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.